it seems conceivable that maybe the US dollar could weaken against other
Hmm.
currencies, and that might have some interesting implications. Also, there's lots of, tokenized treasuries and T-bills and so on um, that have been gaining traction on chain. So it'll be interesting to see how that works when you get lower rates, actually, and also the impact on the stablecoin sector, right? Stablecoins are an amazing business when you have, 5% rate.
It's Thursday, August 29th, and this is Markets Daily, hosted by me, Jen Sanasi. As you know, on this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to what's happened, where we are, and where we're going. Good morning, everyone. On today's show, we are joined by Nansen co founder and CEO Alex Svanevik. Alex, welcome back.
Thank you, Jen. Good to be back.
Of course. Now, you know the vibe of this show. We are talking all about the crypto markets and the things that are affecting or not affecting it. Um, just kick us off this morning. What are you watching? What are you keeping your eye on?
Hmm. I mean, generally, running an on-chain analytics platform, I like to see what's happening on-chain. Typically, there's stuff happening on all fronts, on a short time scale, on a bigger time scale. I think one of the things I've been pretty interested in is just the different chains, because we now live in a multi-chain world, and I try to keep up with how are the different L2s doing against each other, which L2s seem to be winning market share, which ones have lots of growth. I also try to follow some of the other L1s and look at things like daily active addresses, TVL, and so on. And then in addition to that, I've also been, of course, thinking about the kind of macro picture more broadly. We have some big things coming up in the next weeks and months with probably, rate cuts from the Fed. We have the U.S. election, which is probably going to be the biggest event, maybe for crypto ever, or at least in a very long time, given the different views on crypto that the candidates have. So yeah, there's a lot of interesting things going on both within the crypto space and also more broadly in the world.
I want to talk about some of those catalysts in just a second, but let's talk about some of the on chain stuff you're looking at. You mentioned you're keeping an eye on L2s and L1s. There are a ton out there for folks who are not embedded in the different blockchains like you are. For people who are investing in crypto, who are looking at different tokens and cryptocurrencies and trying to create an investing strategy, why is it important for them to keep up to date with what's going on with L1s and L2s?
Yeah, that's a good question. I mean, I think of it a bit like, which platform do you want to spend your time on, and which platform do you think ultimately is going to win, right? Because blockchains you can think of as sort of cities or countries where there's economic activity, and if you want to familiarize yourself with a specific city or country, it's wise to choose the right one, right? Where you will actually have activity, where people will be building their businesses and setting up shop. And so um, the nice thing about EVM chains and most L2s associated with Ethereum is that a lot of the infrastructure is still the same. So if you're new, you're still using mostly the same wallets, maybe the same portfolio tracker, the same analytics. So that's convenient. But there are also other L1s to keep an eye on, right, that are not in the EVM ecosystem. So chains like um, Near, for example, and you have chains that are not technically L2s, but the sort of EVM related, like Tron or even Ronin for gaming and so on. So I think it's important to just look around a little bit now that we are in this multi-chain world, and not commit too much to one single ecosystem, because you might get a bit pigeonholed, and if you're betting on the wrong horse, then that's maybe not great as well. So yeah, those are some of the reasons why I think it's important, both as a user, as a builder, and as an investor, to look at different chains.
You know, a lot of people who come on this show expect a consolidation in both the layer ones and layer two chains. Do you expect layer ones and layer twos to consolidate, or do you expect them to kind of coexist in this multi chain world to continue to get bigger and bigger?
I think in the short term, it's probably going to explode. So you're going to have lots of different chains, lots of different L2s. And to me, it's a little bit surprising how much funding these different chains are able to attract, because it's such a red ocean if you think about all the different chains that exist. But still, they continue to attract hundreds of millions of dollars in funding. And so you're probably going to have to see it getting harder for chains to actually just raise in the first place before you see consolidation. That would be my guess. So I think, definitely in the next year, probably in the next couple of years, you'll continue to see an explosion of chains and L2s. But at some point, to your point, I do think there's going to be a consolidation. I don't know what the right analogy or mental model is, but some people think of L2s as almost like just separate servers. And in this world, you could have tens of thousands of L2s or even more, right? You could maybe have millions of L2s for that matter. But in a different world, you think of L2s more as, either browsers or social media platforms or operating systems or something like that. And in that world, you'll probably have very few. And you'll have some that are optimized for some things, others are optimized for other things. So I think the other way to think about it maybe is like specialized chains versus general chains. And so maybe you could make a comparison to computers, right? You have video game consoles that are specialized for gaming, and you have ecosystems around, Xbox, PlayStation, Nintendo, and developers building on those. But then you also have, general purpose PCs where you also have gaming, but you have, other types of applications. So yeah, there's many different ways to think about it. I think in the short run, there's going to be an explosion, and then consolidation. I don't think it's going to happen before, closer to say 2030s or something like that. Would be my guess if I had to make one.
Any layer twos that are sticking out to you that are standing out right now?
Yeah, if you look at the metrics, I mean, it's pretty clear that base is doing extremely well. It's growing on pretty much every metric. If you look at daily active addresses, I think it crossed 1 million not that long ago. Arbitrum is another one that has lots of on-chain assets, TVL. Then you're seeing other L2s that have been climbing, ZK Sync, Scroll. Of course, you have Optimism, Blast as well, which of course had a sort of huge build-up with Blast Gold and all these different things. And then it's a very long tail. From there you have Mode, you have Manta, you have Mantle as well. And so, yeah, there's really tons of L2s out there. And I think it's interesting to follow because of the sort of strategic aspects, like how do you actually win that market? And is it a winner takes all market, or is it, kind of a much broader market? So I think it's interesting to follow just from kind of a strategy perspective and seeing how the different L2s play this game. And of course, as a user, investor, and builder, I also think about it in terms of like, which ecosystem do you want to spend more time on?
I want to shift the conversation now to some big news that came out yesterday. I know you've been tweeting about it. OpenSea received a well notice from
Mm.
the SEC. Lots of industry reactions. There are some that we've published on CoinDesk.com this morning. I'd like to dig a little bit deeper into this with you. Wells notices have become something that we're familiar with in this industry. Many crypto companies have been served with them over the past years. But what did you make of this?
Yeah, they're almost a badge of honor at this point. It's almost a
You
mark
know
of
you've
quality.
made it when the SEC hits you with a Wells
Yeah,
notice.
yeah. I mean, firstly, I should say, number one, I'm not a lawyer. Number two, I don't even live in the US, nor am I American. So I probably shouldn't comment too much on this. But I think, like, in broad strokes, you have a regulator that's, out of control and regulating through enforcement, which is not constructive for the industry, obviously. But it's also not constructive for innovation more broadly. And so that's sad. And I think, even if you don't care about crypto, you should be worried when you see that, because that is not the way a regulator in the most innovative country in the world should behave. And so it's really sad, actually. And it's also pretty absurd that you can sort of label, JPEGs as securities. I mean, if you're trading Pokemon cards, will Gary Gensler come after you as well? Or like, where do you draw the line? So is it just because it's on a blockchain that that he would come after you? So this ties back to some of the catalysts, right, that we were touching on earlier, that I think if there will be a change after the U.S. election, I think one of the first things that are going to happen is like Gary Gensler is going to lose his job, and that's probably a good thing for crypto. It's definitely a good thing for crypto. It's probably a good thing for America, and I think it's also a good thing for the world more broadly. So that's, I mean, without making any political judgment beyond that, for crypto specifically, I think, it would be a lot better if you didn't have Gary Gensler in that seat. You should probably have someone else. And, given all the wealth notices and the way he's treated crypto companies, it's pretty clear that regulation by enforcement is kind of the tactic that he's employing.
Yeah, I think most in the industry would agree with you. And it's interesting the conversation that's come up ahead of the November elections. I've heard folks on both sides, on both parties, the Democrats and the Republicans, saying that Gary Gensler is probably not the right person for this seat, given all of his interactions with this industry. Um, I think it's interesting you said you're not American, you're not in the US, you're probably not in the best position to comment on this story, but so much of what happens in the United States, especially when it comes to regulation, really does impact people and companies who are not here in the US. I know that you're an advisor to Pudgy Penguins. How should folks who are seeing this news, who either interact with NFTs as like a consumer or retail user or NFT projects, be thinking about it? Just, I'd love to pick your brain on this.
Yeah, I mean, I was sort of half joking about the Pokemon cards, but I mean, if I try to sort of crawl inside Gary Gensler's brain for a moment and sort of steel man the argument, which by the way, I haven't read the communication around it or anything, but just conceptually, I would imagine it's only a very small set of NFTs that would even be considered as potentially a security. And so, something like Pudgy Penguins, which is literally JPEGs on the blockchain, there's just no conceivable way you could imagine that those are securities, the way I think about it, at least. I mean, that just seems absurd. The promise of these things is that they are a JPEG. That's what you get. Any other benefits you get from holding these are purely, community driven and sort of permissionless. So if people choose to airdrop tokens on you as a Pudgy holder, that's not something that even the team can control, right? Like the team behind Pudgy. And so, I would imagine that it's only a small portion of NFTs that they would even consider to be securities, and that's kind of what it's based on. Surely not every NFT on a blockchain is security. That just is meaningless, right? Because it's just a medium. So that doesn't make sense. But more broadly, I think Pudgy has shown that despite the pretty terrible market NFTs have experienced since 2021, there is a handful of NFT projects that are here to stay. And yeah, personally, I've been like thinking about, hey, should I finally get that CryptoPunk and looking at a few other collections. So maybe, and it seems that the markets have also been picking up a bit on NFT prices. So, now it's almost like I want to buy one in spite of that Wells notice. But yeah, yeah,
I love
I
that.
think
I
like,
support you
yeah,
picking up an NFT in spite of the notice.
yeah, maybe I should see what yeah, I'm sure there was a very funny kind of song a day NFT where this guy made an NFT with a song about how he's suing the SEC, which is great. So maybe I'll put in a bid for that.
Well, let's talk about the trajectory of NFTs for a second here. There was a while there that they were very speculative. They were going for insane prices. That kind of died off. The conversation really started to pick up around utility, and now we've been in this kind of, I don't know, holding pattern where NFTs have taken a little bit of a back seat. What do you think the future is like for NFTs? Where do you see NFTs finding their place if they find one?
Yeah. So when we think of NFTs, most people think of profile pics and JPEGs, right? Even
Hmm.
as I was talking about it earlier, that's kind of the example I was using. You could take the view that these profile pics were really just a proof of concept, for the NFT format. And the larger vision for NFTs to really become big is when they start getting connected to real world assets. So, think of buying a property. Each property is non-fungible. It has a specific, location in space time. And so that means it's non-fungible and it's unique. And so if you would represent the house on a blockchain, it would be an NFT. And many of the protocols and infrastructure around NFTs that you can use today, think of things like MetaStreet or lots of other NFT protocols. You could imagine, for example, uh, using these with a house or some kind of real world asset as collateral and then borrow against it, right? So I think there's no doubt in my mind that NFTs are going to be enormous, because my view is that every asset in the world is going to be tokenized eventually.
Mhm.
And there are some assets that are unique. That means you need to have non-fungible tokens. And so they're just kind of a logical consequence of the belief that every asset will eventually become tokenized, which is what I believe about the future. I don't know exactly which time horizon, but that's what I believe is going to happen. And so, like I said, you can think of PFPs, fudgy penguins, punks, and so on as almost like just kind of this toy world where we get to build out all the infrastructure around them, how you can trade them at any time, 24/7, with liquidity and globally, totally permissionlessly through any type of wallet, self-custodial, all of that stuff. We're building up all the infrastructure around it on a pretty kind of degenerate sort of JPEG concept. However, all of the infrastructure, or most of the infrastructure, can still be used for that more real world and much larger vision of NFTs. So that's always been my view. And I think you can take the same view with crypto more broadly, that this kind of degenerate gambling that we are all part of when we are in crypto in 2024 and the years before, really what it is kind of this very, clever scheme to fund the infrastructure of the future of finance, right? And it's sort of, sometimes you kind of lose track of that, and everyone thinks that crypto is actually just meme coins and that's it. But the meme coins, the way I see it, it's not like, sometimes it feels a bit like, God is up in the sky and looking down and has this master plan of getting us to trade meme coins and JPEGs, and then actually it's going to fund this amazing new infrastructure for finance, right? I don't think that's actually the case, but that's somehow what has emerged. Uh,
Mhm.
and and so I'm very supportive of these kind of speculative use cases, because I think at the end of the day, it just drives more infrastructure building and more products and more protocols. And we all know that 99% of what's being built is not going to be around in 10 years, but that 1%, or maybe a little bit less than 1%, is really going to change the world, and it's going to be worth it for all the nonsensical things that we built. So that's how I think about it, like broadly speaking, that really all of this degenerate gambling and speculation actually will lead to something great in the 2030s, 2040s, and beyond.
I think that's a great way to put it. We got to look past the degenerate gambling that kind of has taken over many corners of the space towards what we're building for the future. I think that is a great way to put things into context. We do have to wrap up soon, but there are two things I want to hit with you. We want to talk about catalysts, and I want to talk about your bags. I think before the show, you said the show me your bag section. I might steal that from you for future shows. But let's first talk about catalysts. We mentioned the elections here in the United States coming up in November. I imagine you, like many people in the space, are watching that. But what else are you watching? Let's say until the end of 2024 as it relates to macro stuff.
Yeah, I think like the rate cuts that are most likely going to start now in September are going to be interesting, and to see also how other central banks respond to that. It seems conceivable that maybe the US dollar could weaken against other
Hmm.
currencies, and that might have some interesting implications. Also, there's lots of, tokenized treasuries and T-bills and so on um, that have been gaining traction on chain. So it'll be interesting to see how that works when you get lower rates, actually, and also the impact on the stablecoin sector, right? Stablecoins are an amazing business when you have, 5% rates. Tether is probably the most profitable company in the world per head count, definitely in crypto. And so I think that's kind of, the US dollar is generally interesting and has many like secondary effects for all of crypto. And so the rate cuts and like how fast they will happen, how other central banks will respond will be interesting. Um, Obviously, yeah, the US election I think is interesting. I think that you could sort of take two views on it. Like one is that I think generally there's consensus that Trump is the more pro crypto candidate, and in the short term will be good for crypto. I've heard some people claim that if Kamala Harris wins, then maybe that could be good for crypto internationally because it might drive more crypto companies to go abroad. And in a way that could also be good because, I mean, for those of us who don't live in the US, because it might stimulate more building outside of the US. Although in the short term it might be negative, especially for crypto in the US, because it's probably a continuation of the same regime that you had so far. But like I said, you could actually take the view that this is sort of bullish either way. It's just on a slightly different time scale. Trump is probably bullish immediately. Maybe Kamala could also be bullish after a little while when things people have absorbed this and made the decisions to potentially move offshore and so on. And then frankly, it'll be like if Trump does win, it'll be interesting to see if he actually goes ahead with some of the stuff he said. Like, will he actually fire Gary Gensler on day one? I think he has said he will do that. So as much as I don't like talking about politics, it's kind of hard to avoid it these days, and it's such a big thing that will impact our space. And of course, people have many different opinions, and of course, the world is not just about crypto. There are many different considerations to look at for sure. But 2025 potentially could be a really crazy year for crypto, I think, in a good way. And so with lower rates, with the potential kind of more clarity on regulations, and frankly, lots of builders who've probably been holding back a bit on issuing tokens and sort of launching protocols because they want to see what's going to happen on the regulatory front in the US. Maybe that's going to be kind of released early next year. So I'm actually really optimistic for next year. I think it's going to be a great year for crypto.
I think you're spot on for 2025. I share that optimism. So hopefully we see a better year for crypto and the industry continues to grow. I want to come back to what you said about interest rates and dig a little bit deeper into that. What does a decreased interest rate and a potentially weaker dollar mean for on-chain ecosystems? Let's talk about DeFi. What does that mean? How does that translate?
Oh, I love that question. Okay, what does it mean? It can mean a few different things, right? The most obvious thing is that lower rates means more risk on, right? So you can think of this as there's now lots of dollars sitting in high interest yielding instruments. Think of money markets, T-bills, and so on. When rates come down, some of that money will move out of that and move into risk on asset classes. So like equities, but also perhaps Bitcoin, ETH, and now we have ETFs too, right? So there's kind of almost like a direct, it's like a fast track from these more TradFi financial instruments into more crypto native risk on assets. And so that's maybe kind of the most obvious effect, that just generally you get more risk on and money flows into new to other risk on sectors. I think the second thing is stable coin issuance will probably go up when rates come down because of that same effect that I just described. Like this money coming out of these other sort of TradFi markets and TradFi instruments, and then moving on chain, tokenizing it, moving it onto a centralized exchange. And like interestingly, I was noticing in our on-chain data that there's actually more stable coins on exchanges in the last month or so. And so I would expect to see that continue to go up as rates come down. It does mean that Tether and Circle make less money because they make money basically off of the interest rates that are generated on the dollars underlying the stablecoins. Um, but overall, I mean, it's hard to argue with the fact that it's bullish for crypto when rates come down. So overall, it's a good thing for crypto.
All right. And the last thing, show me your bag section. If you had to choose 3 project, 3 tokens, 3 cryptos that you are really bullish on right now, what would they be?
I mean, I have to say Pudgy Penguins as the first one because, it's never failed me. I buy as many dips as I can of Pudgy. It's not that accessible right now because price has gone up, but you can still get exposure through it through creative ways. I saw there was like a Meta Street airdrop pass you can buy where you basically get exposure to any airdrops that you might get from Pudgy. So that's kind of a creative, sort of more like DeFi or crypto native way, or degen way to get access to the Pudgy airdrops. The other one that I think is interesting is Layer 0. I think this sort of fits into this thesis of the world is multi-chain,
Mhm.
and it's great to have infrastructure that sort of connects all these different chains. So logically, that makes sense. Not commenting too much on the tokenomics and all that stuff, just from the perspective of this is a protocol that the world needs. And then maybe the third one, unfortunately, I don't hold any at the moment. I did buy the dip on it, but I sold it too fast. It was a good trade, but it could have been even better if I held on to it. Would probably be Aave, and I think the downside on Aave is pretty limited. It's an interesting bet also on like the L2 ecosystem for Ethereum because it's deployed on most of the main L2s. And it's a DeFi primitive. Like it has something like $12 billion TVL. It's something that people actually use because it's a useful protocol. And so Pudgy, Zero or Layer 0, and Aave would be my 3 names today. Not financial
Alex,
advice, of course.
not financial advice. Never always do your own research before investing in anything. Alex, thank you so much for joining Markets Daily this morning. It's been a pleasure.
Thank you for having me, Jeff.
And thank you to everyone who watched and listened to this episode. If you don't already do it, subscribe to the CoinDesk Podcast Network. That is available on all podcast platforms. And if you like to watch and listen, we're on YouTube. Subscribe to our YouTube channel, hit that thumbs up button. Thank you for watching, and we'll see you on Monday.